Give it a few more minutes, let people join. Hey, Skip, how's it going? Yeah, good, mate. All good here. Hey, Tom. So I'll go ahead and jump straight into it. So, Euro USD shorts with a play this morning. Everyone see my screen okay? Good stuff. Okay, so yeah, EU shorts, as you all probably know, we build that higher time frame or that 4-hour bias. As mentioned on my outlooks, pretty much, you'll know that we had a 4-hour directional bias of bearish. This was due to, as you can see on Monday, aggressive push down, that aggressive sell-off, and it's following through with bearish momentum there. Yes, at pretty much this stage here, this bullish candle, we would have had a no follow through. This is due to the wicking of this fractal low, i.e. draw on liquidity, and therefore signaling a no follow through in momentum. However, the sort of 12 hours after that, we get confirmed follow through. That is because we had 1, 2 bearish candle closures below this low. Yeah, so below the 1.0972 level ish, price has managed to sort of sustain shorts below that price level, therefore transitioning from an NFT to an FT. So that pretty much was giving us our 4-hour directional bias. That follow through, and then we merely were waiting for a sort of low to print. As you see, that happened, I think, in the evening over here in the UK. So that printed, we then printed a fractal, and now we have our 4-hour directional bias is short, or to the sort of bearish sort of bias. We're waiting for price to get into premium. So come into a premium market, i.e. sell it at a premium price and then buy it back at a discount. When I say buy it back, I mean when you're in a short trade to get out of the short trade, not buying in discount. So that is pretty much the high time frame, that 4-hour covered. Let's go ahead and jump on to the 15-minute. As you'll see from my outlook from this morning, I had internal ranges and external ranges. The external range here, external high to low on the 15-minute, is denoted by the fractals, the most recent fractals, the most recent fractals within price, that is. So if we're printing a high, printing a low, and we don't see any interaction with this high or low, therefore this range is maintained as the current external range. If we sort of, here for example, broke the high, we therefore moved to the most recent low, and the most recent low would have been here, and we'd follow price down. However, we never sort of had that. It printed external high, external low, and this is the external range, and this is pretty much, this external play is going to be the highest probability. We only specify externals because we give you a basic sort of structure, a basic outline. What we feel is going to be the most probable, therefore the external ranges are always going to be more probable. That's why we've only outlined those in the course. And then as you'll notice, let me pull this back a little bit. As you'll notice, we have the most recent internal range. Had a few questions regarding, I saw in the chat regarding these sort of fractals left up here and random fractals. Like, you know, if it was a bias scenario, random fractals to the left. I mean, if you've done the testing to back it up, then you could trade away from those. But in my opinion, from what I've learned and so forth, I prefer those most recent sort of fractal points. It's going to be the most relevant, the most recent pools of liquidity, yeah, in price. So yeah, we had the external range, which was the highest probability, and then we have that internal range. As you can see, and probably notice from your back testing, when we have that range high to low, and it's a very large range and price just sort of manipulates around, we'll build internal range structure, which is what it pretty much printed here. And again, as per the team updates that we put out, and pretty much most of you guys in the Discord chat, you was pretty clued up with the internal ranges, external ranges, and the 4-hour bias. Most people understood the play today, as it were. So play price forward. As you can see, this is the candle that manipulates this high, that takes out that fractal. Now, it doesn't matter if it's a close, break and close, or a wick. You know, the fact is that this candle was the driver that liquidated this pool. Yeah. When we understand that, we pretty much, again, simply just put our sell stop below the low, stops 1 pip above the high, I round it up, so call it 8, targeting 24. And one person mentioned that it was all going to get swept, but you know, that is part of the game. We stack probabilities, and this was a probable trade. Yeah. There we go. We get tagged into the trade. No drawdown pretty much when we get tagged in. And we all pretty much know the outcome of that. It messed around for a bit, but then went on to hit TP pretty nicely. And then if I was to just adjust this internal range now, you add these highs and lows, print a new low, and we've got this high here, and then we can extend up to our low, and this is the current 15-minute internal range. So again, if we're looking at sells, see how it sets up. Again, Outlook will go out about 7:30, 8 o'clock, just before London Open. You know, we could see manipulation of highs, stacking quite a lot of liquidity. So that remains to be seen. And we are sort of hovering around the equal line, or sort of 50% line. Yeah, it's still a pretty big range. Like, you know, we could do that, tap it a little bit, then we move our range to here, maybe something like that. What about the moves in New York Hills? Not specifically, because it's like a random fractal to the left. I mean, it's valid. I think someone asked me this, DM me, it is a valid trade. If you are comfortable with, you know, just some random fractals to the left. But for me, I was focused on most recent, which is in New York session, it would have been this play here, you know, and then it just continued up and it would have been no tag anyway. And then by that time it had moved up, printed a new fractal range internal. So, I mean, yeah, these, you know, they are liquidity pools, but for me, I'm using the most recent. So that was how I would play that. So yeah, the most recent sort of ranges are the key here because it's the most recent price action. Yeah, the internal sweep is the most recent fractal, yeah, which is what it was here. Yeah, that's it. So like this here, for example, this candle, so it would be 21-ish pips, something like that. Can you get it to the low? 1 to 3, just about. But again, yeah, we know that's quite a big a big stop loss. So it's about weighing up the risk, the risk to reward. Is it worth exposing your account to that unnecessary risk? Comes with experience and time on the charts. I don't really look at GU too much today, actually. I'm not sure how that developed. Let's have a quick look. So yeah, NFTs, pretty much a bearish bias, and then it looks like it is 2 p.m. candle close, has closed above this level, so we can say it's unconfirmed. Yeah, you got it, Tom. Unconfirmed until this candle closes at 10 p.m. I believe. So yeah, reassess that in London. To change this, let's keep it in an unconfirmed status. I like to keep it just a little bit cleaner, remove all the unnecessary lines off the chart, and then see how it develops coming into London session tomorrow. But if we just have a look to see what went on during the session, it was pound inflation, I believe, this morning, and it went up. So did GU quite aggressively, but as we know, we'd sort of taken out this high. Then by the time, so that 10 o'clock close would have confirmed as an NFT. So you can kind of see that on the 15-minute, an aggressive push up, then it pulls back, and then at 10 a.m., we're down here. So this is merely just a wick on the higher time frame. So you can see that on the 15-minute as well, which you'll notice. Horrible to use, Saqib, but it looks good to me. Easy on the eyes. When you wake up, sometimes it's I check the charts first thing, so I think I'm swaying towards more dark rather than light. So no real trades inside London. Again, New York one just outside of session if you was to play that. Nothing crazy on GU there. Quite a wiki price action day. Yeah, no worries, Tom. I mean, there is on your back testing, you'll notice it over the two pairs. If you stick to externals, yes, there is trades, but if you do externals and internals, eventually, once you've got that sort of baseline data after you've done the external plays, that is on the 15-minute, you can then build on that sort of baseline data and go from there, really. The EU trade was an internal one this morning, but it was, again, about stacking probabilities and not really exposing the account to too much risk. In my opinion, this trade was worth the risk this morning, so that's why I took it. Again, I don't expect you to be able to take trades straight away. It's your first week. Get that back testing sorted, get your head around all the concepts, and then you can build on that, really. Anyone in here trade anything other than EU and GU? I know some people only make one session, either London or New York. So you sort of have branched out and looked at more pairs rather than looking at different sessions. I don't know, a few people might trade AU, was quite a popular one. Something we're testing, obviously, and maybe in the future you might see something to do with AU. So that is pretty much it. As always, in the morning, you'll get the outlooks for EU, GU, just how prices developed overnight, really. So again, as it states on the charts, the bias is bearish still. Sells in premium are a go, but again, we'll assess that in the morning. So taking continuations after FT. You mean? I mean, the bias is bearish we are continuing with the bearish bias. So yes, I think, is that what you mean, Pat? Or continuations? Yeah, not sure what you mean there, Pat. And now essentially this was a continuation trade because it's continuing with the bearish bias, which was confirmed with the follow through on the low. Oh, yeah, that's specifically more so, if I remember, September or August, I think, off the top of my head. Yeah, you know, if you've got heavy selling momentum, just a quick tip here for you. Heavy selling momentum, i.e. 4 candle closures, is a good indication. You know, we are in a heavy bearish market. You can look to capitalize on that pretty much. You'll pick that up from the testing. It doesn't happen very often, but when it does, when we're moving heavily, especially on EU, that heavy momentum, you can capitalize on those continuations inside session, of course. Yeah, so yeah, it does. I mean, by now you should all pretty much have an indication of what the sort of basic outline of the strategy is. And it's those basics is really what sets it apart, yeah? So, and then you can build on it however you like. It's there to be sort of catered to your lifestyle, but it's been built in a way that it's super simple to understand and manipulate. But don't try and manipulate too many things at once. You know, if you're, I don't know, if you've got your baseline data like I talked about, you can build from that. You can change one thing, like I've had just said, include continuations when you've got like heavy selling or heavy buying momentum. Include those. If your results are worse, then don't use it. If they're better, then use it. Yeah. Backtesting is super important. Testing as a whole, backtesting, forward testing, super key. Yeah, I think I'll end it there, guys. Any more questions before I shoot off? Good stuff. Yeah, as always, available in the Discord, so don't hesitate just to contact me in the private channels or public channels, wherever you feel comfortable, and I will see you all in the morning. Cheers, guys.